With us now, Anthony Esposito, CEO and founder of Ascalon 6 Capital. Julia Cartwright's here, senior economist at the American Institute for Economic Research. Welcome to you both. All right, Anthony, start us off. The letters have been sent out, and the tariff threats, we got the deadline of August 1st now in the mix here. So how are countries going to respond, and how are U.S. markets monitoring this?
Yeah, so countries are responding as expected, right? Everyone's either coming to the table and making a deal because they realize they are the net exporter to us. We are the largest consumer in the world, the largest economy in the world, and they need to come to terms with the fact that there will be a more level playing field, and they're doing so. Other countries are trying to negotiate and work through the process. So Japan would be a good example of a country that has a real problem because we're looking to tariff them or tax them 25% on autos, plus the 10% baseline. Autos are their major source of income as far as exported good, and their economy is not that strong at this point to begin with. So they need to be a little more particular, a little more careful in the negotiation, which is respectable and understandable. As we move down the road, the markets are trying to reprice and remodel what the tariffs mean and how they're going to affect everything from consumer spending to inflation to economic growth, and that's a continuing process. You see the fear and the greed, the manic sell-off we had in April, and now this manic rally back up to all-time highs this month. The market is the market. It will continue to process. There'll be some emotion. There'll be some modeling going forward, and I'm not really sure where we come out. My gut is that we have really fully priced in any benefits from the tariff conversation at this point. So the larger overall risk longer term is to the downside, but it's been an impressive manic sell-off and rally off of these headlines.
I mean, it's hitting all-time highs when you're looking at the market itself. It's quite astonishing when you take in some of the factors here of the fear, the uncertainty, but yet still hitting those numbers. I wanted to bring up another point. Many Americans are wondering, okay, tariffs in place, which are essentially taxes on other nations. Where's all that money going? How does that play into all of this? Well, the Treasury Secretary, Scott Bessent, he actually spoke about that. Julia, here's that. Watch.
We will have taken in about $100 billion in tariff income thus far this year, and that's with the tariffs, the major tariffs not having started till the second quarter. So we could expect that could be well over $300 billion by the end of the year.
Well over $300 billion by the end of the year, and you're clearly talking about making more deals with other nations, and obviously this administration still has several years under their belt to go. Is there an optimistic side of this, Julia?
There definitely is, and something that's important to note is that the tariffs are bringing in revenue as long as people are still purchasing those products at the same rate. So if the United States consumer decides not to purchase these goods abroad, then those numbers could really change. Another important point to bring up is all of the exceptions surrounding the tariffs. And as the other guest noted, there have been quite a bit of rallies even after this tariff announcement. I think that's because the market has seen what these tariffs actually look like. And if you look a little bit more under the hood, especially with Section 232, there are a myriad of exceptions with these tariffs, mostly Canada and Mexico, which are two of our three biggest trading partners. Many large companies, Apple, Intel, Johnson & Johnson, are also exempt from these tariffs. So there's a big difference between the stated tariff that the Trump administration is noting and the actual tariff that people are feeling. So I think the delta between those two is really going to give markets a boost because tariffs are ultimately a tax on American consumers. And I think that's why the market is a little bit more positive about this tariff rollout.
And of course, we can't forget those companies that have chosen to invest in America, deciding to build factories here in the States so you avoid those tariffs altogether. We got to leave it there. Anthony Esposito, Julia Cartwright, thanks so much for coming on with us this morning.